traders. Welcome to Thursday's market SITREP. And the market continues to wallow kind of around here sideways as we get out of the budget and budget battles, debt ceiling fight, but also start digesting economic data. And the data this morning aren't really that good. Unemployment claims, I'm really not paying attention to. Why? There's still some California glitches that are really skewing weekly unemployment claims. I think they're a lot worse than they are, but this is the one that really grabbed my attention this morning. The flash manufacturing PMI at a 51.1 handle. That is the lowest level of manufacturing output since 2009. That's really not a good thing. On the good bad scale, that's a very bad thing. And one of the canaries in my economic coal mine, as many of you know who trade live with me, is the Baltic Dry Index. Now, if you've never heard of it, it's essentially it's a measure of shipping activity. And whether it's FedEx or a big freighter sitting outside the port of Fort Lauderdale, if people aren't shipping stuff, the economy's really not, growing or moving. Last time I checked, we're still not Star Trek and using transporters to zap stuff around the world. You need a FedEx, you need a ship, and if that rolls over, it's usually not a good sign. So as you can tell, the Baltic Dry Index starting to roll over a little bit here, and that's not a good sign for our economy. Net, who cares though, right? With all this quote bad economic news, you think the market would be rolling over. It's not, because again, we're in bizarro market where good news is good news, bad news is good news, and awful news is great news. So we might get a little toppy here, but every time we've been toppy in the past and seen a little bit of a pullback, this is obviously the budget fight and the debt ceiling pullback. It doesn't matter, because Uncle Ben's proven that he's got a big old Ben Bernanke put underneath this market that's going to keep it going up like this. So smoke your hopium. Market drifts a little bit higher from here. Having a great week so far in our weekly options model portfolio. A couple trades on Goog, Iron Condor, and a Iron Condor on the S&P. We're up about $2,500 in 4 days on about 15,000. About 15,000 total in risk. So potentially looking at $4,000 in profit on about $15,000 in risk. So really nice trades in our weekly options model portfolio. Very happy with those. And like I said, I might sound like the world's biggest bear here, or perma bear, and I am. But you have to trade the market. You have to trade what the Fed is doing here. And if anything, as we talked about the other day, based on all the bad economic data and buffoonery in Washington, the Fed might actually increase asset purchases. So they're not going away anytime soon, and we go higher from here. I thought it was interesting this morning. Also, in the Journal reporting Carl Icahn starting to push Apple for $150 billion stock buyback. It must be nice to be that big of a guy where you can muscle a stock around like that. And it was funny, Bill Gross from PIMCO kind of having a tweet war against this guy, like, hey Carl, why don't you go be like Bill Gates with all your money and do something to help others instead of helping yourself by trying to boost the stock price. So very, very interesting that starting to see some heavies blast back and forth at each other. They're the rich, and the rich are different from us. They're rich, right? All right, guys, got to run. We have an asset management brief this afternoon at 1 p.m. with the Black Bay Group. Got to go prepare for that and keep an eye on some of my weekly options trades and the rest of our portfolios. So have a great rest of Thursday, and I'll talk to you guys tomorrow over at Wealth Creation Investing for our Friday market wrap-up. We'll see you.